In the international world of commerce and trade, it is crucial to comprehend the notion that bridge economy is a part of it. Bridge economics is the term used to describe price and cost differences in two markets, typically due to issues like exchange rates for currencies as well as trade barriers and the local economy. A particular example worth a look is the differences in prices among Europe as well as Turkey. Europe is well known for its diversity in the economic environment and diverse economies, with nations like Germany, France, and Italy dominating the scene with regards to GDP and production of goods and services. However, Turkey is a rapidly growing economy within the Middle East, with a rising GDP as well as a youthful populace that could boost economic growth over the years ahead. One of the main elements that cause prices that differ among Europe as well as Turkey is the currency exchange rates between both the euro as well as that of the Turkish lira. It is important to note that the euro is a currency that is strong, which is widely used in nations in the European Union, while the Turkish lira is a relatively less powerful currency. That means that products and services sold in Europe tend to be priced more when compared to Turkish lira. This makes them costlier to Turkish customers. Another reason for the differences in prices among Europe and Turkey are trade barriers and tariffs. Although there is a common market and the European Union has a single market as well as a customs union, Turkey is not a part of EU and does not have certain trade agreements, which could result in increased taxes on imports. This could result in higher costs for European goods in Turkey and Turkish items within Europe. The local economic environment also plays an important role in the price difference in Europe as well as Turkey. In particular, the cost of labor in Turkey might be less expensive than those in Europe, which can result in lower cost of production for Turkish products. It could result in Turkish goods being affordable on both market in the domestic as well as international. In spite of these differences in price, however, there are business opportunities to capitalize from the economic bridge that exists between Europe as well as Turkey. As an example, European companies can benefit by the low production costs in Turkey through outsourcing production or purchasing the raw materials they require through Turkish suppliers. In the same way, Turkish companies can expand into the European market through offering affordable products and services. Understanding bridge economics as well as the prices that differ in Europe as well as Turkey is essential for companies seeking to make their mark on the global market. When considering aspects like currency rate, exchange restrictions, as well as local economic and political conditions, companies can make educated choices and take advantage of potential opportunities to grow and expand across both of the regions.